So let me start with giving you some global perspective, and I also want to briefly touch base that as a house, quant is a very macro-centric house, and we look at the market employed data. Okay, what market is employing, that is a very important data point from the behavior perspective. Okay, as compared to traditional houses, or people look at the based on the projections or based on the assumption based analytics. Okay, that's a one differentiate we bring to the table. Second most important thing is that our money flow analysis, equity money flow analysis for global markets are at multiple decades. Okay, multiple decades high. What it means, this is good amount of euphoria it is getting witnessed. So what it means also that we are in a euphoric phase of global equities. Okay, but what is more interesting is that if you dissect this euphoric phase into both value and growth component, then you realize there's a euphoria happening at the growth level. Okay, and whether you talk about the component of S&P, whether you look at the Nasdaq or you look at the MSCI World or any major indices, if you look at globally, so there's a euphoria across the globe. It's witnessed more on the growth side, and where value it is actually on the other side. So rather value is in the neglected territory and growth is in the most admired category. Okay, and this is one of the key reason why we are launching a value fund at the current level. It also gives us a perspective that we want to time it better, and that's the way we are looking at the scheme. And within that, I also want to add, though we say that euphoria is there in the global equities and vulnerability for US market is on a higher side. But if I have to talk about uh, if I have to look at from the risk appetite perspective, the risk appetite for emerging market is still on the lower side. And we believe that money will shift from developed markets to emerging market, and India will be one of the biggest beneficiary in that. And even from next 2-3 years perspective, Indian macro parameters are one of the best in the industry on relative basis. And even I have to talk about the relative perception analytics for India is also in a very early stages. So we remain very constructive for India for next few years of opportunity. So the traditional way is very mechanical thing. Most of the parameters are statical in nature, and price to book or price to sale is basically the derivative of prices in some manner. Okay, where we try to differentiate our work in a very different way. It's very difficult to quantify some of these things, like some of the stocks like keep on declining or for years also. Like I'm just, this is not to be quoted. I'm just explaining you from your own understanding how ITC was underperforming the market, being the one of the best market cap company, the largest market cap company, let's say in 2013, and what happened in last 8 years or 7 years, it value became deep value and further deep value. Okay, so what we differentiate in terms of our understanding is that we work through our perception analytics. So we work through our behavior data points, and that is something which is very unique to the table, which we talk about. We try to gauge stocks or sectors or asset classes based on the behavioral data and perception analytics, whether they are trading in the most admired category or they are trading in the most neglected category. If anything which is in the most neglected and now approaching the most hated zone, that's a time we try to identify those stocks. Okay, and we try to build our portfolio on that. Anything stock which is peaks out, let's say today we are talking about technology stocks are peaking out globally from the valuation perspective, and even from the what you call perception analytics point of view, not from the price point of view. So that's a time we believe that is the time to prune down these names. Okay, I'm just giving you from an example point of view. Okay, our approach is more based on the behavioral data points, and emphasis is on the perception analytics to identify the stocks which are trading in the neglected territory. That's the way. And it's a when you talk about perception analytics, it's a very detailed works which we do, and multiple data points are part of it. So if you very simple, if you look at the relative graph of S&P growth versus value, okay, and this is data which is available from 1995 onwards. So if you look at for last, this ratio currently is trading at lifetime low or whatever, maybe 25 or 26 years low. So it's multi-decades low. That itself gives you an indication, and that the value has underperformed the growth significantly in last many years. And similarly, when I try to dissect this thing from the perception analytics point of view, the perception of growth index is peaking, growth stocks are peaking out, and the perception indicator for value stocks are bottoming out. So it's a very unique opportunity to optimize the value which is available in these so-called value stocks on a relative basis as well as on an absolute basis. So if you look at, if you know, we manage our money in a very dynamic manner. We are completely sector agnostic. Okay. However, based on our money flow analysis, we try to identify sectors or themes within the portfolio. And based on the risk on environment, we try to rebalance our portfolio. Okay. And along with the our framework of VLRT framework, where we try to give 1/3 weightage on the valuation analytics, 1/3 on risk appetite, and 1/3 on sentiments. And this all put together, we, with the help of our predictive analytics tools, we try to identify stocks or sectors which are in the neglected zone. Okay, so we are, as of now, we can talk about few sectors, but anyway, we are very agnostic. Currently, the sectors which we can talk about could be textile, could be capital goods space, could be banking, okay, and real estate. There are many names which are qualifying right now. But anyway, we are not married with one particular sector. As our data point changes, we also revamp or position our portfolio accordingly.